Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand the closing action on the D Street, also in terms of the momentum in the benchmarks, the sectors, as well as the stocks that are buzzing the most in trade. Also, amid the earnings season that's kick-started from yesterday, what should your strategy be now, especially on the IT stocks that have been trading subdued since the morning trade? We'll also get you expert take on all of that. But first up, a quick look as to how the markets are trading, especially the Nifty and the Sensex right now. Well, looks like we are going to be a ninth time lucky, because now the markets are back up into the green towards the highest point of the day. We were struggling through the trading session with losses and a choppiness that was being witnessed throughout the trading session. But the Nifty is once again back up at 17,824, up by just 12 odd points, and the Sensex is also up at 60,418, about 25 points higher. Just mild positive, flattish with a positive bias. But in case this momentum continues, we may see a ninth time consecutive session closing into the green as well, and right ahead of the long weekend and the truncated week action. Now, small cap 100 index is also back up into the green with 0.2% higher. The mid caps are also moving in tandem, and you can see a similar action right there. In terms of the other sectors, as far as the Nifty index is concerned, you will see a whole host of sectors that are moving into the green now, especially with the Nifty Bank now 0.2% higher. Autos are moving up. The FMCG is slightly up as well. The Realty Pack is 0.5% up in trade. Consumer durables up slightly, but there is still weakness as far as the IT stocks are concerned, because those are still trading lower by 2.5% and creating some kind of a pressure and limiting the upside for the markets right here. Apart from this, you do see some losses coming in on the metals pack, on pharma that's dragging a bit, and the sentiments on the financial services look absolutely lackluster. Healthcare and oil and gas also down by about 0.5%. But time now to welcome our guest on the show. Mr. Ruchit Jain joins in. He's the lead research analyst at 5paisa. Ruchit, welcome to the show, and thank you so much for taking the time out for this discussion. What do you make of the market movement? I mean, we were seeing 8 consecutive days of an upward move, then some consolidation. What is your sense looking like?
Yeah, hi, very good afternoon, Sakshi. Well, no, there's no doubt about the short-term momentum, which is on the positive side. No, just last couple of series, we have seen very aggressive short formations by the FIIs. But in this series, when the market surpassed that 17,200 mark, they started covering the short positions, which was the first trigger for our markets to go up. If you look at the start of this April series, they had only about 10 to 12% positions on the long side, and rest of the positions were on the short side in the index futures segment, which was, and this data was very short heavy. So they have covered much of the short positions, and this ratio, which was around 9 to 10%, has now improved to about 35%. So this short covering has led to this up move. Now we can also see a renewed buying interest in the banking, NBFC space, real estate sectors, mostly those who have a very close relation with the interest rate. So the time when we saw RBI taking a decision to pause the interest rate hikes, many of such sectors we have which have directly correlated, which are correlated to this interest rates, have started seeing some buying interest. So I think, except some of the sectors such as maybe IT to an extent is not participating in this up move, but apart from that, I think broader markets are clearly indicating a good buying interest. So we expect this momentum to continue. Yes, it's ninth trading session today continuously. Consecutively, when the previous day low has not been breached. So the momentum readings on the lower time frame chart have now reached that overbought zone. So we may see some either some consolidation or a small correction, which would again be a good opportunity to enter longs at low levels. So one should keep a buy and dip approach and trade and trade positively. Any declines in the coming week should again be used as a buying opportunity.
Okay, buy on dip approach in the current market scenario. You know, another news that's perhaps led to this positive sentiment coming in is the AMFI data for the month of March. Now, what that data suggests is that the net equity inflow in mutual funds has crossed the 20,000 crores mark, and that's the highest level in a year. So in 12 months, this level has been seen. Remember, in the previous month, we had seen the net equity inflows standing at 15,650 odd crore rupees, and there's been a sharp up move as far as the March flows in equities are concerned. Now, also what we have seen at the same time is that there has been also an outflow as far as the debt flows are also concerned, and they are at the highest in 6 months as well. So this is the debt-oriented category which was seen in liquid funds as well. There was a net selling of 56,924 crore rupees as well. Also, we do see that investors have started to focus a little bit more on the long duration funds, and this was after the government really introduced the changes in mutual fund taxation as far as finance bill is concerned. Ruchit, your take on the kind of flows we are seeing in the markets through the mutual fund space, and especially the equity mutual funds as well. Does that still remain a more comfortable space for fresh retail investors, new retail investors to invest in rather than directly entering equities?
Yeah, first of all, I think these equity investment through mutual funds have been robust over last couple of years. That's why we have seen that in spite of all the volatility in the global markets in this last 1.5 years, our markets have managed to our markets have managed to hold well, and all the selling by the FIIs have been managed by these domestic investors. So as far as direct investments in the equities goes, I think there are a lot of new traders coming into the market, the new those who are less than 30 years of age and coming from tier 2 tier 3 cities. So with limited knowledge on the equity markets, I think it's a good idea to invest through mutual funds, and once they have good experience or a good knowledge on the gain a good knowledge on the equity markets
Yeah.
and the fundamentals, I think then it would be wise to to invest directly through stocks.
All right, so that's as far as the positive news from the mutual fund space is concerned. Despite all the volatility that we've been witnessing in the markets for in the month of March, we have seen a sharper flow coming in as far as equity mutual funds are concerned. So that's a bit of a positive sign as well. But let's come back to the direct equities as well. You know, we've seen the earnings season kickstart with TCS reporting its numbers. How are you looking at the entire IT pack? There's softness in today's trading session for sure, 2.5% down. Of course, muted numbers, seasonal weakness, and on top of that, all the macroeconomic concerns, including the US financial services that faced this recent concern of the banks getting wound up as well. How have you really analyzed the numbers and the entire IT pack? How does it look to you?
So this last 8 to 10 days, the move that we have seen in the markets, there is clearly lack of participation from the IT names, and the kind of momentum that we have seen again today after the TCS results, indicates that the buying interest from, at least from a near-term perspective, is more with the banking, NBFCs, real estate, and other stocks rather than the IT sector. So I think I would better wait, keep a wait and watch approach in the IT names. It's sometimes it's no better to get into the stocks at higher levels once they surpass their immediate resistances, or once we see a good buying interest coming in along with the price volume action. So as of now, we are not witnessing any kind of outperformance, neither they are participating along with the broader market movement. So better to stay away from these names from a trading perspective, and we may see some more correction in the Nifty IT index towards the 27,500, 27,800 mark, where I think one should again take a review whether contract calls should be taken over there. But as of now, since there is no strength seen, it's better to wait and watch and avoid any kind of bottom fishing here.
Okay. What about there are two other pockets that have been showing some kind of a momentum of late. I wanted to talk about pharma pack that was up sharply yesterday, and there was some momentum seen in some of the stocks with intraday moves of 10-11% odd as well. How are you looking at the pharma pack, and is this a space to keep an eye out on?
Yeah, I think a lot of corrective phase I think has already been seen in the pharma name. Initially, it was a price-wise correction post 2018, and last 1.5 2 years we have seen a good time-wise corrective phase in the stock. So I think the valuations of many of the pharma stocks were also quite reasonable. In fact, some of them were much below their average valuation. So I think this is one of the pocket where the downside seems to be very limited, and the selective pharma names I think could have bottomed out, and they could see some good momentum in coming 6 to 8 months. So it should be very stock specific within this space. But the worst seems to be over for the pharma stocks, and ideally we should see a gradual up move in at least the frontliners within the pharma names.
Okay, and the royalty pack is the second one I wanted to talk about, because we've been seeing some very positive business updates from most of these companies, record sales for some of them as well. Any particular royalty counters that look interesting at this point in time?
So I think real estate space started underperforming since the time the interest rate started rising, mostly after October 2021. when the stock market so after 2020 the stock market witnessed some corrective phase. So ideally now, in last 1.5 month we have again seen a good buying interest in some of the real estate names. So I think going ahead we should see a renewed buying interest in many of the real estate space. But one should be very stock specific. DLF within the larger space, then Asiana Housing within the mid-cap space. These are the two stocks that we have a positive view on, and we have recommended to our clients as well that in case if anyone wants to look out for realty pocket going ahead, then DLF and Asiana Housing will be the two stocks where one can take a fresh exposure on.
Okay, so we've talked about 3 packs. What about banking and financial services? That is clearly emerging as a consensus buy amid the earnings season. Your thoughts here?
So yes, banking NBFCs have clearly been an sector over here, and we have seen the stocks within this space have attracted very good volumes in the cash segment. So ideally, the leadership has come this time with the banking and NBFC stocks again. So this should continue at least for next few weeks, where the market would continue its move.
That are on top of your radar, any top bets that you would like to recommend to all our viewers?
I think within the banking space, ICICI Bank is one stock, in the large cap banking names, which is looking positive. The stock has given a breakout from its consolidation phase, and the volumes are gradually increasing. So we could see ICICI Bank heading towards 940, 950 in the near term. So this is one stock that one can, short to medium term traders can look for buying.
Okay, understood that. Well, thank you so much, Ruchit, for being with us on the show and discussing all these sectors and stocks where opportunities can be seen for investors amid the earnings season. Markets are building onto the gains right now, 60,461 for the Sensex. It's moving towards the higher point of the day. Also, the Nifty at 17,834, about 0.1, 0.2% higher in trade. We'll keep an eye out on the markets just about 12-13 minutes to shut shop. But looks like we are going to be seeing another day in the positive closing end as well. With that, we wrap up this edition, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. You can also stay in touch with us via other social media platforms like Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in.